Right now, multifamily bridge funding, there's abundance of money, and it just depends on where you fall in. But there's no one deal and no real quick quote we can do. It's really got to dive in. That's the bridge loan programs. There's creative ways to go about it. I mean, sometimes if it's a smaller property, usually the smaller loans are all recourse. There's very few that are non-recourse. Is it available? Yes, but it's just more difficult to find.
Welcome to the Investor Financing Podcast, where we interview real estate investors and lenders so you can learn all the secrets to getting your projects funded and scale your portfolio. And now, your host, Beau Eckstein.
Hello and welcome to another episode of the Investor Financing Podcast. And on this episode, we're going to talk about an update on multifamily bridge lending and the different buckets of lenders that are out there. So there's these big institutional funds that will do 5 million minimum loan amounts and greater. There's actually one other bucket that will do 10 million plus and greater. And those bigger type loans are usually the best bridge financing terms for the A minus type properties, B plus properties, 300 unit properties, 400 unit properties that need to close quickly. It's a value add play of some sort, and they need bridge financing. There are those funds that just specialize in those like minimal value add plays that are just bigger transactions, 10 to $100 million deals. The 1 million to 3 million range for loan proceeds, there's not as many institutional debt funds that are funding those type of transactions. Those are more like the smaller funds that have accredited investors in them, maybe some institutional funds, and those terms vary. They vary across the board, and it really depends on the sponsor strength, the property. Is it a large MSA? Is it an tertiary market? That's really kind of where the sizing starts. What's the purchase price, the whisper price? What's the Capex requirements, if any? What's the current occupancy? What do you believe the stabilized value is once you execute your plan? And from there, we're working on the different funds, and each fund is different, has different pricing. We've got one or two lenders that they'll underwrite based on the MAI stabilized value, MAI appraisal, stabilized value. They'll go up to 70% of that stabilized value based on what the appraisal comes back at. So you can get higher leverage, right? Because you might only have to put 10% of total cost into something like that. Then we have other lenders that want to see 30% of total cost, 25% of total cost. And each one of these lenders has different kind of pricing. Usually it's a 12 to 24 month standard term. And then they have extensions built in. You can have 2 extensions at a half a point or a point each. And that's kind of the buckets. There's all these buckets. And the kind of middle market, if you will, loan amounts from 3 to 4 million to 10 million. There's a couple funds out there that are also direct licensed Freddie and Fannie lenders. And if they have a Freddie license, there's what we call bridge to Freddie or bridge to agency.
You're listening to the Investor Financing Podcast. We'll be right back after this break.
Are you in the market for a commercial loan? Did you find the perfect opportunity but need funding? Have a special situation? At Find the Bank, you will get quotes with competitive rates and terms from multiple lenders without any hassles. Have a multifamily property, construction project, owner-user property, industrial, mixed use, hotel? At Find the Bank, you can get nearly any kind of commercial financing. The process is simple. Once you send us some information about you and your property, we send back a quote sheet. Then we quickly connect you with an advisor. You won't spend hours calling multiple banks trying to find the right person to talk to. We'll connect you fast to the right person, hassle-free, better terms than you could get on your own. Go to findthebank.com and complete the form. An advisor will be connected with you within minutes to discuss your specific financing needs.
Those type of bridge lenders, they're underwriting you to agency standards off the bat. So they want to make sure that the takeout's going to be there, assuming that you execute your plan. And those bridge lenders have better terms than the kind of straight bridge lender. So terms in that kind of, I don't know, 7 million, 5 million and less, good terms right now are somewhere in the fours, low fours, bridge to agency type. But a lot of the execution you're going to see is in the sixes. And if you don't fit in that bucket, or your property is a big value add and it's in a tertiary market, rates fluctuate anywhere from 7 to 10, 11%. It just depends on the deal itself and the sponsor. If the sponsor's got a lot of experience and has done a lot of value add projects, then they're going to usually get the best financing, short-term financing possible, obviously. If it's more of a risky deal or a smaller deal, there's different little buckets that these loans go in. So really kind of to circle back on this is what we do is first we look at the sponsor, the property, what the play is, where the property is, what's the financial worth of the sponsorship, what's their experience, what's the Capex component, what's the stabilized value. And from there, we can usually get indicative terms from our bridge lender network really quickly. And we usually have a good idea. I'm talking from my perspective as a commercial mortgage advisor, and I hope I'm bringing value just on how we're going about sizing these deals up. But essentially, once we look at the T12 and the rent roll, and we'll pull Google pictures, we'll look at the market itself. If it's in a smaller market, what's traded. We always want to know what's been trading, per door. We need to know that going in and be really good at that, because we need to provide good comparables to the appraisers sometimes, and just know our numbers so we don't get kind of blindsided with an appraiser or a broker that's doing a BPO for the bridge lender and it's just not up to date of what's trading in the area. So we want to know that. What's the play? Realistically, are you going to sell the property, or are you going to look to refinance it, quickly? What is it? Is it a huge value add, or do you think in 6 months you're going to have the property stabilized? And then we got to look at, is there any prepayment fees? What's the exit fees? What are the fees up front? And that's all what we do as soon as we get the project in. And then we're looking for the best terms through our bridge lending network. I mean, right now, multifamily bridge funding, there's abundance of money, and it just depends on where you fall in. But there's no one deal and no real quick quote we can do. It's really got to dive in. We usually know quickly, what bucket you're going to fall in and what that pricing and rate range will be for you. But that's the bridge loan programs. There's creative ways to go about it. I mean, sometimes if it's a smaller property, we can use one of these national hard money funds, and they're more liberal on certain things. So it just really kind of circling back depends on the transaction and the sponsorship team, how you're pulling the equity. Are you syndicating, or is this just a joint venture? Who's going to sign? Who's going to be a guarantor? Are you looking for non-recourse? Usually the smaller loans are all recourse. There's very few that are non-recourse. Is it available? Yes, but it's just more difficult to find. Anyways, I hope you enjoy this little segment on multifamily bridge lending. It's a useful tool for multifamily investors that are buying small properties and buying very large properties. Bridge lending is here to stay, and sometimes way more advantageous than trying to do a bank or credit union loan to go into, when you can go bridge to agency instead, or bridge to HUD. So there's just different reasons why you would or wouldn't want to go that route. Anyways, Thanks for watching this episode. We'll see you on the next one.